This is Around the Coin, and today's guest is Monty Metzger, the CEO of LCX.com. Liechtenstein Cryptoassets Exchange is LCX. And we talked about their raise of $9 million, what they do, which is to provide a terminal for people to both look at prices and then make trades on cryptocurrency. They're based out of Liechtenstein. So Monty traveled the world debating where to set up his company and landed on Liechtenstein. We talked about why he did that based on the regulatory climate blockchain act that exists. We talked about the different countries and the different policies that exist today. The US's policy on crypto, other countries' policies on crypto in the European Union, and why they take those stances that they do. Monty is incredibly knowledgeable about the regulatory climate. We also talked a little bit about his project Townsend, Timonds.com, where they effectively lease out and have this building to maintain security over diamonds and allow people to trade those. A huge part of our conversation was spent talking about this incredible product that they have that allows people to launch cryptocurrency projects in Liechtenstein, issue tokens, build their audiences, file compliantly. It's a really awesome tool that is available. We talked about how they raise money specifically. Raising money in cryptocurrency is challenging, to say the least, to know who to talk to, how to structure the company, whether to raise privately, to sell tokens, pre-sale, at discount, vesting, all those things. At the end of the conversation, though, is an amazing story that I hope to have Monty back on for, which is how he handled getting hacked for close to $9 million. The business, the currency, the exchange was hacked, and the criminal stole close to $9 million. The protocol that they took, the actions that they took to contact Coinbase in Europe, to contact the US entity, to trace this individual down, is amazing. And I think this is the first time he's discussed this publicly. It was the first time in history that a criminal investigation or a criminal demand letter was made to this person using an NFT. They identified the wallet, and the judge in New York City sent the NFT with the public URL available. So amazing story. It was at the end of our conversation, but highly encourage you to tune into that. I was on the edge of my seat. It was wild. This must be one of the craziest hack stories in crypto. So hope to enjoy this conversation. I certainly did. Here is Monty Metzger. All right, Monty, excited to be chatting with you. I love what you're working on. I love the uniqueness of your decision to move to Liechtenstein. We'll talk about that in a minute. You're running LCX, which has an awesome domain name, Twitter handle, everything else. Maybe we'll first talk about you personally. Previous to LCX, I understand you were a founder, then became an investor, then jumped back into crypto full time. What was the thing that you saw when you decided to leave the venture world and jump back into founder world that became really compelling? And was it something that you had been wanting to do for a while, or this was just an overwhelming opportunity in your mind?
Mm-hmm. Well, you're right. Like, I'm a founder by heart. So I started companies and businesses since I'd been in school in the 90s. And then since then, I'd been in the digital world. And I started several companies and then switched over to become a business angel. So I exited the company, started to invest in tech companies. And then in 2013, I met my friend and co-investor Adam Draper in Silicon Valley, and we talked about Bitcoin a lot. He gave a speech at one of our dinners we had back then, and I thought that's so fascinating. It's really the technology which will change financial world and monetary systems. But as an investor, and especially during the time I'd been running a venture capital fund, which was registered, regulated, we could not invest. I could only do private investments. So I'd been following the space, and then also, 2014, Bitcoin was at $1,000, and then it it fell down to $100 back. So I thought, let's wait a little bit, like 90% down. Let's see how it develops. And then 2015, 16, everything was been like more interesting. But when regulation kicked in and people talking about new laws, how can investors be part of it? That's where my intention peaked, because that was really the changing moment where I decided this opportunity now gets really interesting, where we are exiting this kind of Wild West, where it's experimental niche, into a mass market where the next growth wave of the crypto industry will start. So, and that's why where I decided I have to stop everything else. I have to go all in crypto. I moved over here to Switzerland, opened a company next door in Liechtenstein, and we got started. And now we have a fantastic community around LCX.
What was it at the time specifically, if you recall, that prevented you from making investments in crypto companies? Was it specifically investing in the ICO or pre-sale or tokens, or was it just that no one was doing it, so there was unclear regulation on it?
Exactly. So the key topic which sidelined general, like professional investors and us as a venture capital fund, is the unknown. So are we allowed to hold a token? How will custody work? There's no bank account for that. How can we make sure that the limited partners are fine in terms of the compliance governance structure of the fund? So the only thing I could do is to buy some Bitcoin or Ethereum for myself, and following the space I had been talking about openly all the time. And for me, the key point was, which I repeatedly said, blockchain is to the money what email is to the letter. So it's a fundamental technology out there which will shift a lot of things. And of course, email also at the beginning, people said, well, I can still send a letter. But I now hear the same arguments. So we were sidelined. And so key topics were custody, laws, is it legal, how to sell it again, how to provide security for limited partners in the fund, and then like all the unknown questions. The only opportunity was investing on the equity side.
Oh, sorry. It seems like today either something changed legally or just investors have gotten more sure-footed on the mechanics of the investments. Generally speaking, I see a lot of money going into, U.S. entities that are investing in crypto companies. Andreessen Horowitz, a big one, many other smaller VC funds specifically targeting crypto companies. They are generally buying pre-sale tokens or discounted tokens that are on some vesting schedule. Maybe they're owning a part of the company that is developing the technology, and then there's a transition to own the tokens. From my conversations with founders, it varies significantly. And I think people are still kind of figuring out what the best mechanics are to invest. But I don't sense a big resistance to deploying capital, at least in the US, based on regulations. Maybe I'm not privy to what the actual legal challenges are. Do you feel that something changed, or is it just generally globally governments are more open-minded to making these kinds of investments?
Yeah, I think a fascinating moment in time. It's a tipping point for the industry, because there's now a lot of interest in this like new digital asset class, and a new interest which we've never seen before, with these like big funds with billions of dollars investing in tokens purely. But also this could not have been done like 2 years ago because the infrastructure was not there. Now there are governance structures, they have multi-signature wallets, there's custody providers, they can make sure that it's on like large custody service providers, and make sure that the investor money is kept safe. There's always the risk of like investing in startups. This will never go away, but these technical things, these are there. And then the other element is really the legal side, because you don't want to invest in something where the company will get sued in the future, because they've done the token sale the wrong way. We now see this with XRP being long lawsuit with the SEC, Binance now with like BNB token, build, what they name it now, investigation started. So as an entrepreneur, you want to focus on your technology, on the company, and not worry about how, like if the token would be classified as security in the future, or if you've done the token sale the right way. And that's actually exactly what LCX is a core product which we are offering, that we provide a token sale manager which combines the legal side. We do everything for the founders, all legal documents, and then the technical side, also the platform. And I can explain all the details about the legal side because it's really very, very unique. We're licensed as token issuer, so we can do token issuance on behalf of other projects.
And LCX specifically raised roughly $9 million in 2019 through an ICO. I'm curious, when you went into that process, given things change frequently in crypto, but it wasn't that long ago, 3 years ago, how did you approach the research phase of understanding how you wanted to raise that money? Was it, and how did you actually end up doing it behind the scenes? Was it a partial pre-sale vesting token sale with private investors, or how did you go about it? And how did you think about the key decisions in that process?
That's right. So I'm coming from the financial world, having run the venture capital fund, which had been regulated. So I knew we need to get things right. Overall, the vision of LCX is to bridge the old traditional financial world with this new blockchain innovation. So basically playing with the rules while innovating. So we were reached out to regulators, to governments, talking about with central banks on what we can do to make the industry like behave in a way, to make it a fair market, which is not ignoring or avoiding any regulation, but rather working with the regulators and say, we want investor protection, we want like the basic rules, but don't make it too complicated. And so before starting LCX, I'd been invited to like the Middle East, to Oman, spoke with foreign ministers and the central bank CEO, and also Singapore, Malta.
And why were you going to? You're going to all these places for what purpose?
To evaluate kind of the legal structure of these places. And then I came across Liechtenstein, the small country, it's the sixth smallest country in the world, with a very high financial reputation. It has a AAA rating at Standard & Poor's. That's the highest rating a country can get. So high reputation, very strict due diligence laws. And they started developing, I think in mid-2017, a working group on a new blockchain law. And when I heard about this, it was immediately clear that this might be a game changer, because they're not looking at one piece of the puzzle, like starting a license for exchanges, but rather having a holistic approach on the industry, creating roles and responsibilities alongside the whole value chain of any token, from the token generation, smart contract development, to identity, like the whole KYC on investor onboarding, selling the token, issuing the token legally, until like trading, custody, and so on. So like the full value chain had been covered. And that's the reason why we have the L in the name, and started LCX, the Liechtenstein Cryptoassets Exchange in Liechtenstein.
Yeah. Okay. So you're in the US at this point, and you're saying we want to raise money for this project. Did you have a clear mind for what you were building at that point, or is it still in the idea stage? Because most people wouldn't think to travel the world and research different legal structures with the presumption that you're going to be moving. Most people would say, okay, are we going to raise money through our LLC at the dev shop and use that capital to pay people, or are we just going to go and raise pre-sale? Was it, why did you do that?
Well, I've started companies all over the world. I had teams in Japan and in New York City. in even in Silicon Valley and in Nordics of Europe. And then we invested a lot of money in like different startups in different jurisdictions. So for me, it was clear, like going all in means also like we move wherever it's necessary. And I want to not have just like a letterbox on the ground, but rather be there completely. And, you know, US, I would say, is like during the time it was completely stupid to go there for a crypto company and a blockchain business. And still, I think it's very risky and not the best place. So there are many other options tax-wise, also legal structures and everything. So that's why this like crypto valley established, you know, from Zug, Switzerland to Liechtenstein. Now there are even some companies in the Italian part of Switzerland. So this had been established as the place for the big foundations. Ethereum, Tezos are here, like probably 100 meters from our office over there. And yeah, so that's why I moved there and I looked for this jurisdiction. And now what we see is that the MiCA regulation, whole Europe by the European Parliament, is copying things from Liechtenstein. So Liechtenstein really became a role model in terms of how this works. You know, it's a small country, everything is quicker to decide. The parliament is much smaller. So it's a good place for experimenting, I would say. And then the rest of the world can copy from the key learnings. And that's what's happening.
Yeah. I grew up in a relatively small town in Northeast in the US, in Connecticut. And the town was 60,000 people. And I was curious what Liechtenstein is, and it's 39,000. So it's like the country is incredibly small. And they have I think one of the highest GDPs. IKEA is based there, but it's a little bit deceptive to say that, because if a corporation is based there and you have 39,000 people, GDP looks really, really high. But regardless, you're 100% right that you can iterate fast. You can create new capital structures and laws that make a lot of sense without much red tape. I have seen a lot of companies based in the US raising on token pre-sales. I noticed you have his German accent. Do you speak German? Was right. There?
I'm German. Yeah.
Okay, you're German. So it was easy for you to move to an area that speaks, I believe, German. Do they speak German, Italian?
Exactly. It's a German-speaking region. Liechtenstein is part of the European Economic Area, so we have full access to whole Europe, all like European Union plus a couple of more countries, plus access to Switzerland. So it's like a hybrid model. So everything we do is easily being passported, and we have like full access to like these European markets. And as you like, if you have a German passport, then you also have the right to live in Switzerland. Liechtenstein is a little tricky. There's a whole like green card lottery process, and there are only 18 green cards giving out per year.
Wow.
So becoming a resident, like I have the residence work permit. I'm allowed to stay, but not for like living there.
That's
very strict.
Yeah. Well, good. When you're that small, it makes sense. So how did you approach this? You said, we want to find the best place to live. You're comfortable moving to Europe, given that you're from there. So there's more of a elasticity in where you're going to live. Liechtenstein, you incorporate with this blockchain act. Did you, from that point, say, we're going to go out and send emails, get intros, you're well connected in the venture community to VCs? Or did you more think about it as targeting retail investors through an ICO sale?
In general, you asked me also, was the idea clear from the beginning? And the vision and the overall route and direction was totally clear. And I wrote everything down on a little napkin. So the napkin.
I thought you were going to show me the actual napkin. That would be amazing.
The actual napkin, that's the old, yeah. It's actually in put it in a safe place. But it's like, when I look at it, it's still true, and it still guides us from that moment on this like vision on how to bridge these two worlds and get best of both worlds, from old traditional systems and the new blockchain innovation part. On the other hand, the path was total unclear. Like, we didn't really know what to launch first. how to actually do it. The laws had not been passed. It was a little delayed. So we like filed everything 2019, but it had been started on 1st of January 2020. That's also when we got like all the approvals then, and we got 8 blockchain registrations and approvals. That's more than any other company in the country, which we're pretty proud of. And and then the kind of most critical part, I said that it's a tipping point for entrepreneurs. And what I mean by that is it's probably the most exciting time to start a company, because you are not dependent on VCs. You're not dependent on external private equity money or people who are then coming on your board and trying to tell you how to run a company. It's fully consumer or like customer focused. You can build a company by finding clients first of a product which you will create, and you're giving them a token and they can participate on your journey. And that's what we did. That's what we focused on, like community first, you would say customer centric. Yeah. Mm-hmm. So the customer in mind. And we then started working with them and said, like, how should we prioritize doing the product development? So the first product we launched was L6 Terminal, a trading desk, like a Bloomberg desk for crypto, where you could trade across multiple exchanges and manage your portfolio, which we launched in 2019 with a good start. And we learned how traders think in our community. But most importantly, there are people who like had been there from start, and they're still on board. They're still like holding the tokens. Mm-hmm. They're using it as a utility, and they're still the strongest fans and supporters and ambassadors. And as an entrepreneur, this gives me, like me personally, a lot of energy. Like every morning I see positive messages. I see feedback also, like this is not working here, like you need to improve. And we're listening. And it's like, consumer driven or client driven, instead of a VC telling you to like grow faster and expand, whatever. And you have pressure from a monetary perspective. Here we're just building a product which everybody loves.
Yeah, those damn VCs. So when you raised. So
I have him on the side as well. So I understand.
Yeah.
And you're calling and say, like, what are numbers? How can we exit this investment again? Like all these things. And there's an investment period, and then also, life cycle of a fund. So we sometimes had to close positions and sell them again, even if we didn't really want to do it. All these things. So, and that's changed. And I mean, that's like magic, isn't it? It's like it's starting like a musician, but for tech music song, like a
totally.
Product. Yeah.
And the order of operations was, you have this idea, you move to the area, you incorporate, you write maybe a white paper or some structure, you acquire licenses that you refer to, you build a community. I'm thinking Telegram, Discord, Twitter. You're actively promoting the concept of something which you hadn't built yet. You create the structure to raise money through an ICO, raise money through the ICO by advocating the benefits to the community, customer centric, as you mentioned. You bring in the 9 million and then use that cash to hire people and build out the first version of the trading terminal. Is that roughly the order of operations?
Yes. Yeah. Absolutely. Like all the capital there from beginning had been going in the product. Until recently, we had like zero marketing budget. Basically, we've spent everything on great product, great team, talent, also education, a big topic, because we had like young, very smart colleagues and team members who just learned a lot. I see them growing over now 4 years is great, and we are like have a very loyal team structure there. And now it's changing. Like we have super exciting products which are scalable, which can go big, and we are starting now several awareness campaigns. We've been strong at the World Economic Forum in Davos. We are now at Consensus. We like really give it it's the year of the tiger. So it's the year of growth and power, and probably conquering some new markets.
I dig it. I dig it. And when you publish this raise that you're doing, I'm just trying to wrap my head around the fundraising part specifically. So you said, hey, we're raising, did you set specifically the terms and then just publicly disclose that, saying this is what the discount, was there a specific discount or vesting schedule for people? And then it's 100% retail investors that you said we're raising 9 million from the start, or that's just how much it kind of got to?
It just how much it got to. In a way, we included some private strategic investors. You know, we have a suite of advisors who are now with us much longer than they actually committed to, who also invested personal money. So this includes Yatsui, for example, the founder of Animoca Brands, who now did the other side with Bored Ape Yacht Club and invested in CryptoKitties. So like a gaming pioneer, I would say. Then Jimmy Wales, the founder of Wikipedia.
Oh, nice.
Or John Tapscott, the founder of the Blockchain Research Institute and like mastermind thinker. So and a few other industry experts, which we thought it's great to have them on board. Mainly, you know, as a coach and mentor on what we should do and how to focus and how to grow. And then we also partnered with Liquid, this Japanese / Singapore regulated, fully regulated exchange. I flew over to Tokyo and like we did the whole promotion from Japan in terms of this IEO, so the initial exchange offering. And we thought, as the laws in Liechtenstein had been not passed yet, we already stick to like the full rules in Liechtenstein. We knew due diligence is important, this investor onboarding, identification of clients. So it had not been put on a DEX at start. So we had to identify everybody who's participating. Of course, there had been like special terms on it. So if you like be there early, you get special discounts. It's also like, I should say, special risks you are taking. They all believed in us, and you know, and the price was so little, like too many zeros in front of the one. So and since then, I don't know, thousands of percent it went up, and I think. Yeah. So at the moment we could still like grow a lot, I would say. But looking back at that, we chose Liquid because they had been fully regulated, operating since 2014. They know how to do these things. And also Japan is very strict. So it matched our vision. And we worked with them. And I think now they're joining the FTX family.
Nice. So, and if you were to do that, say, thinking about this for founders who want to create their own product in the world, if they're launching today, Liquid might make sense. If you're in Liechtenstein, you would stay in that country's jurisdiction, take that route, given that the laws are now passed. Effectively, you'd be combining a public retail campaign with a private advisory share and institutional investor campaign. And maybe you say, okay, our goal is to raise 10 million, 20 million. We want to go and target high profile advisors. So we're going to take those meetings, come up with a negotiated price for the token, and then disclose that to the public, because the public is going to get more excited when you have big name advisors, investors on board. And then through that momentum, close the round, would you call it a round? Yeah, close that sale, I guess.
Yeah. So that's exactly how it's done. So I think the key question is how to raise millions of dollars in a token sale in 2022 the legal way. Because as a founder, you want to focus on your product, on your clients, on like you have plenty of other things. So you don't want to be in the situation that a couple of years from now, the SEC noticed like you've like sold to US citizens and is not registered and so on. So a solution L6 is providing is the token sale manager, where we go through this process with startups and we take them on the hand, basically helping them doing the whole process from the token generation. So that we do the smart contract development on Ethereum. We've now done a Cardano token. We're looking at Zilliqa based tokens because it's a key partner of us. So then the token is there. Then we look at the white paper and the token economics. Is that like fair? We believe it makes sense to be fully transparent. So they're strategic investors, seed investors. You publish these kind of terms. It should not be negotiated. I wouldn't recommend that. It should be really like, this is the deal. Seed investor, strategic investor gets better terms, but they have to invest more than retail. And then there are like different public rounds as well. So we can handle a full private and a public sale. And what is necessary there is we do by the blockchain law, it's called the Trusted Technology Service Provider Act. So trusted technology stands for blockchain, basically, or distributed ledger technology. And then service providers, like that's LCX. So we do this on behalf of projects. So some called us the like Goldman Sachs of crypto. So in the old traditional world, if you do an IPO, you go to Morgan Stanley, Goldman Sachs, and they sell your stock on behalf of the company to all these investors pre-listing. And then on listing day, they do the book building and everything and get started with market making. It's very similar now in crypto that like we do the token sale on behalf of projects. We create a basic information memorandum, like a little prospectus, a summary of these terms. Then there's the token sales terms of service. And then we file this at the regulator with a notification of the token issuance. And on top of that, before we do that, there's a legal opinion required from our side, which classifies the token. And that's also special about the law. I think there's some discussion in the US going on at the moment, but in Liechtenstein, it's very clear that you can say, this is a utility, this is a governance token, this is an ownership token. So we launched tokenized diamonds. So these are ownership tokens, for example, representing a real world asset. But still, it's not a security. It's not promising any returns, any profits or something like that. And there are like clear separation, like what is a security, a financial product where other things might be necessary, like a full prospectus and so on, can be also done in Liechtenstein. But at the moment, we focus on kind of the core market of like non-securities, which could be listed on Coinbase and FTX and LCX very easily. And so that's the legal side. And then the sales side, also important because we have to file reports afterwards, after the token sale, and say like who invested, how much money, how many investors. These things need to be documented. And our responsibility is to do the investor onboarding. It's a very simple process, like a minute or so, signing up, opening your webcam, holding the password there, doing a selfie, you're good to go. And then you have a verified account and you can invest and participate in token sale. This year, now we've done 3 sales, one for a team from Digibyte core management called DigiMetaverse, 25 million. We did Envision stock, which is like a Getty Images on the blockchain project with 7.5 million, and then 5 million for NFT Maker, which is a Cardano-based simple tool to create NFTs. Fascinating, great product also. And they raised 5 million in token sale. And like they don't have to worry. It's like we are the legal protection for them. We are also legally liable, responsible to do that. And that's the, I think, fastest growing product at the moment. Once the tokens are there, we can list them at our exchange. I think there we are like a mid to smaller exchange compared to the big ones, but we have these unique tokens now listed first. So if you want to buy some NMaker token, only available at LCX at the moment. Same with DGMV, the other one. So this gives us some kind of USP on that side as well, and some instant liquidity or like trading off for the investors, guaranteed as well. So that's in a nutshell this kind of whole token sale process. We're now running a campaign around this at Consensus, and so all details are at lcx.com/Austin. That you find all the summaries and everything we do.
Wow. Congrats. That sounds like a really substantial product that you built. I imagine this took a long time, took a lot of work, because it is seemingly very valuable. When companies come to you saying they want to go through this process, given that you're kind of the, by analogy, Goldman Sachs, helping them create liquidity, make this transaction, is the fee structure similar, where it's a percentage of what they raise, or is it a kind of somehow quoted rate or something like that?
So in general, like, we spend millions of dollars in more than 2 years to come to that stage to offer this. Now we can offer it for companies very quickly. So from first talk to like launch, it could be like 4 weeks. Typically, because we require a legal opinion, we require a smart contract audit by an external auditor, and so on. So these things take a little time, but we're very quick, I think. And we target raises 5 million and up, so we could do 5 million to 100 million, whatever. I think a reasonable spot at the moment is around 10 million, which is in current market situation like easy to raise. And then we are basically in the position to help them out and do the whole token sale on behalf of these projects.
Got it. And the way that you make money on this is you'll take a percentage.
Right.
Yeah. Sorry.
Fee structure, very easy. No upfront cost, and there's a percentage we get on the success of the token sale. So we are basically, I'm an investor also by heart. So we do due diligence on the project and think that's exciting. And then we invest in a way upfront because we do a lot of things without getting any fees. And then we win when they win. So if they don't sell out or something, then it's also a pity for us, basically. So we're in the same boat together. And then at the same time, we're investing our reputation. It's a reputation against our own users. So everybody who is verified can immediately, instantly invest, which means that our LTX community, basically they invested in everything we launch now. It's a responsibility. So we want to get like the best founding teams, the most exciting products on the platform, like the next Ethereum, the next whatever, the next big thing. And that's our responsibility in terms of choosing. And we decline most of the applications at the moment. I really have to like cherry pick on that regard. And if they fail, even if it's like not like fraud or something like that, but just if it's failing, a lot of startups may fail, many reasons to that, it still would like fall back to us. So that's why we're advising, we're helping them on the long term. And so far, like the development had been good, but of course we just got started with that.
Yeah. And I imagine it's is it a transparent pricing, or is it like, I know Goldman's around 2 to 3% for companies who IPO. Is it, you're still figuring that out, much different for different companies, or is it more transparent, like 2-3%?
It's
10?
Yeah, it's a little higher. It's negotiable. It depends on the size of the raise. But it's around 5 to 10%, depending on how much money they raise. Yeah.
And do companies have to, I'm curious to ask you this. So if you're based in the US, or if you're based in Australia, or regardless of where the original founders of the team live, can you incorporate a company in any country, or is there specific rules within countries to say you can operate a company here by just having a PO box or have some local presence? Oftentimes crypto companies will be located in the Cayman Islands or Malta or somewhere, and they're doing that, for various tax and legal reasons. You've traveled the world and think a lot about this. What are the sort of implications of doing that?
So LTX, while being in this small country, is a super international company from day one. We have users from 130 countries on the platform. For these token sales in general, for us, it doesn't matter where their founding team is or where their company is. So it could be even a US, Delaware company, Cayman Islands, Seychelles, or whatever. Because the issuance would be by us. So we would be the issuer in Liechtenstein according to the Liechtenstein laws. So there's no need to incorporate a company in Liechtenstein. one of our startups, where we did the token sale, they decided to do it in Liechtenstein because they're not far away from Netherlands, and there are many benefits of doing that, being here in Crypto Valley. But it's not a must. It can be anywhere. And then in terms of the other side, like the investors, there are rules to it. So we have to be very strict on prohibited countries, from Iran to North Korea, like the standard kind of list. And there are sometimes sanctioned people, or now other sanctions on Eastern Europe, Russia, or whatever. Like there's some rules which are basic, which we have to follow. And then in particular, China and US are still complicated. So at all these sales we did, we excluded US citizens. They're able then to participate in trading on the platform, but for the sales it's excluded. And as of now, it's still unclear. So these US, we had an Australian team, they did the sale on our platform, but in US, it's still a risk. But what we've done now for a project is there are ways to include US citizens in investments, but then certain special rules apply. So it could be Reg D exemption, or it could be another exemption for professional investors. But, as there are no crypto laws in the US at the moment, it's always finding a legal way which is okay. So either it's an accredited investor proving that he's accredited. We've done that with one project for a movie project fundraising, and they're they prove it, and then they invest starting at 100,000. But that's not how we like to operate in the future.
Yeah, it's frustrating.
US will now catch up. It will change, but it might take 2-3 more years.
Yeah, that's frustrating. As somebody who lives in the US, you don't want to be at a disadvantage, certainly structurally, legally. It's this whole accredited investor thing, in my opinion, is so dumb because it doesn't protect people to stop them from making $100 bet, $1,000 bet. Take something, you understand the project. It's kind of demeaning to people to say, oh, you're maybe young and you haven't accumulated money, or you don't have enough savings, and so you can't be sophisticated. I think the pendulum seems to be swinging away from that, certainly with the crowdfunding rules and allowing people to invest in more crowdfunding style campaigns, but still legacy garbage to clean up.
That's right. And what we've now seen a lot in the US is they do airdrops, free airdrops. So like Uniswap, the community just gets something. Now we had Ape token, so everybody participated. Still under the Liechtenstein blockchain regulation, any issuance would be giving out tokens is the first time issuance. It doesn't matter if it's sold or as a present, it's still an issuance event. So for me, I think these things are highly problematic, and founders think, oh, that's a solution. Let's just give it out for free, and then we build the market. I'm not sure if this is legally valid for we'll find out in the next couple of years. Yeah, I think there might be investigations on this as well. So another way is really we do the issuance. We could do even if it's a free airdrop on behalf of the project. And it's, so these are things we're looking at as well.
Yeah, it's super interesting because it's as a founder, you want to minimize risk of doing something, but you also want to do something innovative. And then you're interpreting these laws, which were made for a different time period and different technology set. Granted, there are a lot of people, smart people, working on this to improve these laws. And the US is a big and wealthy and complicated society. So I can understand why things take a little longer than a 40,000 person country.
Yeah.
Given all that, it does feel like this idea that you can't, from a founder perspective, one of the ways I think of as de-risking your project is to do what many other people do. So if you're taking a legal position that many other companies, especially larger companies, have taken, even if it's vague, there's protection. It's like protection in the school or in the herd, and I think there's validity in that. You certainly don't want to be the outlier. It's a balance, right? You want to be innovative and different and unique, but you want to not be crushed by the SEC for doing something structurally unique or in a legally innovative way. So yeah, I've thought about that recently, which is like the SEC probably won't go after everybody if everyone's doing it a certain way. They'll kind of adapt. But if like, you mentioned BNB and XRP are going through, like they took on a lot of risk. They were innovative. They were, a huge project. A lot of money flowed through there. But, there's ups and downs to that approach. I would ask you, so how do you think about the different products internally? So you have the terminal, which you started with, the trading terminal. You built this whole suite of guided ICO fundraising tools. I'm sure you have people dedicated to screening and teams auditing these people and helping them create the campaigns to launch them. That's a whole, I think of that as a company in it itself. Then you also did this diamond thing, which you took the non-commoditized diamond market, GIA certified diamonds, and you say we want to allow those to be traded on chain. Maybe there's other products you launched. Are you thinking of, how do you think about this? How do you think about the balance between staying focused on a product and being aggressive and launching new things? Is there an underlying principle or philosophy of launching new products or distributing your attention?
So the philosophy is really around the centric focus on our clients. And we want to deliver them like outstanding products and looking at what they need. At the moment, the core of LCX is really LCX Exchange. It's a centralized spot exchange where we offer a variety of digital assets, like everything our community wants to trade, so all the basics. But now also these like next crypto gems, the new rising stars, which we're launching first and exclusively. That's a way where we can differentiate. And of course, in the exchange market, everybody's fighting for liquidity, and it's at the moment very monopolistic. But with, I would say, FTX, Binance, probably Coinbase there. But I'm a digital entrepreneur, so I remember when the first social media wave was there. There was Friendster, MySpace, and like all these social platforms, even Second Life and Cyworld, these metaverses or digital worlds. But nobody remembers that anymore. Like nobody knows Friendster now. It's all about TikTok, Twitter, and so on. So now when we reflect on this learning, I would say LCX is really a next generation crypto exchange, regulated, transparent, compliant in many ways. So if we continue that path, we will automatically grow. And with our current growth strategy, we're in a good path. So the exchange is at the core. And then we do experiments and say, we have the knowledge and like a very smart technology team, we should do more things. One key part which we launched is a smart and powerful DEX aggregator. It's DeFi terminal, LCX DeFi terminal, or we call it the Fire Salamander. So at defi.lcx.com, you'll find Fire Salamander as a product, which gives you like always the best price on all DEXs across Uniswap and all other DEXs out there. You can have like smart order routing, and there's a basic swap and a pro swap. This product also will advance. There's a second version under development. And I think the whole DeFi and decentralized exchange market is very interesting. Also from a legal point of view, we're having some talks about that. So that's why we invest in this R&D product. On the other side, another exciting part is tokenization. So tokenization of everything. A key element in the Liechtenstein law is something called the physical validator. If you tokenize something, if you tokenize a bottle of wine or tokenize a bottle of water, this bottle needs to be kept safe. If there's a token related to it, you need to make sure that the physical validator makes sure it's real. It's a real bottle. It's you don't drink the water. You don't destroy it. You don't put debt on it. You don't loan it to somebody. You don't sell it behind the doors. And so there needs to be like a notary function, which is fully liable on this thing.
Right.
And then you can tokenize it. So that's by law in Liechtenstein, again, kind of a role model on how they make sure this is the case. And then you can put it into a token, and the token could represent anything. Copyright, ownership rights, the shares, fractional ownership rights, legal right, usage rights, and so on. So the the token is seen as a container under the Liechtenstein laws. So, and tokenization is big, very big, because I believe you can, I'd say other way, everything will be tokenized. It's just a matter of time. So even like wine bottles I've seen being tokenized now, Lamborghinis and so on. Some things doesn't make sense. But if you look at financial markets, assets, or real estate, or like other like special things like paintings, art, or even diamonds, gold or something, these are all assets which could be put on chain, and you could create like overcome these silos. So even if you want to buy a stock in Australia, your bank is not supporting it. It's complicated. It's not in Robinhood. What do you do? It's like it's a different system, different country. And on the blockchain, this could be harmonized, could be global markets could be created. Really like distributed ledger of real estate, fractional ownership investments, all these like exciting things. And then even like these loan products or new financial products, which are creating kind of a new world for blockchain banking. Yeah. So, and I think to take something out of there, so the Townsend project, that's something interesting to talk about.
What is it? Timeless?
Diamonds.
Oh, diamonds.
So it's called tokenized diamonds.
Yeah.
So diamonds.com is the URL. So that's our project, which we first started with a tokenization project. And there we took real world diamonds. So like this one, and we are putting them in a vault, in like a physical vault in the Liechtenstein Alps. It's like in one of these James Bond movies, multi-signature processes, cameras everywhere, like the guy guiding you open next door, and then it goes up and so on. So, and then, so it's safeguard, it's insured. So the diamonds are there. So this like physical safekeeping will do. And now we created one-on-one ownership rights as NFTs. So each NFT is one diamond, or represents one diamond. There's a GIA number. There's a LCX certificate next to it, which proves the ownership rights. And we started the first drop. We sold 100 diamonds. And on top of that, we created this whole platform with 6 different smart contracts for all these auctionings, future ownership movements, and the relationship between the token and the diamond. So as of now, with the first drop of 100, we're already the largest tokenized diamond marketplace in the world. But we're not stopping there. The next 100 diamonds are ready to launch in coming next couple of weeks.
Diamonds. It seems like such a random thing to get into. What are you? Do you think this is like a spin-off company? I mean, first of all, do you think of what you're running now as you have the exchange, you have this onboarding process for companies to tokenize and sale, and then you're also slinging diamonds on the side. Is that? Do you think of these 3 pieces as the core pieces, and how does the diamond feast fit into the other 2 pieces?
Well, it all belongs to the main vision of LCX, and we're enabling these token sales, and we're enabling tokenization and trading of these tokens. With tokenization, there have been a lot of projects approaching us, but we wanted to, like in the first project we do, we want to control every piece of the process, every element, and so we decided to choose diamonds. And do this as a separate brand, basically as diamonds.com. The key reason is really that diamonds are like small, valuable, easy to store. They're like all different sizes, so we can start smaller ones. We started with 0.3 carat at the beginning, which is roughly a value of $700 or so. And what we could also do, like 1 carat, 10 carat, we could do many things. And the diamond market itself also interesting because it's fully intransparent. Like it's like nobody really knows what's the real price. These markets are all B2B, hidden logins. There's no transparent market like you would expect it to be. So therefore, like there's an opportunity to disrupt the diamond market. And eventually it could become a separate company. For now, it's a showcase for us for tokenization. It's an exciting product also. And then we have an educational part of it as well. So, and we did that by gamification. Because I think at start, like what we learned is it's interesting to hold a diamond in your hand, to own it as an NFT. But nevertheless, it's a new asset class. Like how many people can we attract? And we see that things like Dogecoin go nuts, or Baby Doge or whatever. There's like all these meme coins. That's why we created our own kind of meme coin on top of it as a reward feature. So if you're holding one NFT, one diamond NFT, you get 1 million TIA tokens over 1 million minutes, which is roughly 2 years. So every minute you get one of these tokens. If you hold it, if you have diamond hands, you will be rewarded. But if you sell it or like transfer it on another wallet, there's a kind of penalty fee of 10%. And 5% is going back to all others who has diamond hands, who are like holding it. 2.5% are burned, and 2.5% are sold into LCX token to strengthen our own ecosystem. So this is called a burn, a reflection, and rebalancing. So the rebalancing is the distribution back to that. So this kind of gamified approach, I think is necessary at the beginning because people don't know, like, is that real? Is like, how safe is this diamond? Is it like some want to rather buy a real diamond and put it in their pocket or whatever? So it's a lot of learning. And when CryptoKitties started at the beginning, also it was a lot about 721 tokens. It was all boring for many years, and then it started. So we're at this point that like TIA token is out. There's some hodlers already who are excited about it. We see that the reflection works, which is a fascinating mechanism in the smart contract, and so on, and it works. And we can scale it now, and we do this on several levels.
I love it.
Might be a separate thing soon. At the moment, it's our baby project.
And the thing, you're kind of unique in that you're the physical validator. So you own a building that has security guards, and you're validating that these diamonds are actually there. And
exactly. Right. Well, we don't own it. Yeah, it's outsourced. So you might be aware that the Liechtenstein family and the prince and everything has probably the largest art collection as a private collector in the world. They own hundreds of pieces and other valuable things. So they need to have some places there. And then also there are some private investors, with the highest GDP in the world. They want to like make sure that their whatever valuables they have are safe. So these safe houses, their security houses are incredible. And there are several of them in Liechtenstein, physically in Liechtenstein.
That's so interesting. It's so interesting that's how our like global society developed, to have these relatively political neutral countries build kind of like, it would make sense that you would have the security. I mean, going back to the Swiss bank accounts, it's like the country who's neutral has a disadvantage in that they don't have an army, they're not investing in an army, but they have the advantage that they're politically unbiased as they could possibly be, and so trusted by both sides. And this trust, it seems like the trust is what they're selling. And also they're almost geographically located in the middle of all the action in the world, which is kind of interesting too.
It's a beautiful area. And with the army, there's this one story where like Liechtenstein once had an army, 80 militaries, people.
80 people was their army?
80, yeah. So like, I don't know, when like hundreds of years ago. And then they went out in a war. And then like after months, they came back with 81 people because they made a friend on the way.
That's great. Super
So,
interesting.
Yeah, and now I think it's not relevant anymore. There like
Yeah.
some synergies, but what is relevant, I think, for your audience to know, and it's just like the hot story from released yesterday.
Yeah.
Is about also NFTs and something which has never been done before, and it's a story which starts in January this year, where we had a security incident. So one of our hot wallet was breached.
What?
Luckily,
we as in LCX.
We at LCX.
Okay.
Yeah. So at LCX, like we have a variety of wallet structures, and like one particular wallet, Ethereum based wallet, a hacker got access, and roughly $8 million worth of crypto of customer funds had been stolen. So, like, first of all, we did like many investigations around it. We notified the regulator, the police, public prosecutors, and so on. Immediately, we kind of closed the problem basically. So there was no problem on our website or something, or on the platform itself. Like there's some other reasons to it, but we basically had immediate measures, and one of the measures was also we held everybody harmless. So all the funds are like fully paid back by LCX. So no customer had any problems, and we've completely refunded it. But what started from that moment is that there started like an international collaboration with police and public prosecutors in the background. The hacker itself tried to hide the funds, running it through a crypto mixer called Tornado Cash. So it kind of tries to hide your transactions, but with a specialized team of like forensic people and mathematicians, we backtrace the funds even through the mixer. So there's some ways to actually do this now. And so we could track the path of the funds, and we found especially 2 wallets where the funds are. So these wallets have been now published yesterday in an update to the hack. And we had been watching these wallets, and the hacker then sent 500 Ethereum at the time, roughly like $2 million worth, to Coinbase Europe. And
that seems like Coinbase, a dumb move.
Yeah, very verified account is user account. So we got details about the user there, and investigation started as well. And the funds could be frozen at Coinbase. This was the first move, and we kind of kept quiet. Things are ongoing, and then as Ethereum fell, the hacker then swapped on a DEX into USDC. So this was roughly 25 days ago. So then I called Jeremy Allaire, a longtime friend, the founder, CEO of Circle, and said, like, what can we do? And USDC can be frozen, but it can't be frozen by Circle. It needs to go to the Center consortium who runs the system. And so at that moment in time, just to repeat, there was already a court order from Liechtenstein freezing the funds at Coinbase. This went to Ireland, where Coinbase Europe is based. And they, I don't know, translated it or whatever they did and said, like, freeze the money. They did it. But for Center consortium, we needed a U.S. court order.
Is Circle based in the U.S.?
Center consortium is a LSE based, I think, in between New York and Boston.
Got it.
I think registered in Delaware or something. And then there's Circle Financial Services LLC, who issues USDC. So it's 2 separate entities. Center consortium runs the blockchain and is able to freeze funds if they need to. Yeah. Like, they would never like just do it out of fun. Of course, they have like rules to it, but there's a freezing policy, and there needs to be certain reasons, and also a judge and legal team needs to review it. So we started working with the lawyers also from Center, reviewing that, and within 48 hours, we got a court order from U.S. court, and that was from Supreme Court of New York, from a very smart judge there who really understood the opportunity, and she was like very smart and engaging around the topic, and also I would say brave, embracing new things. And what we did then, together with our lawyer Bluestone Law and Holland and Knight in New York City, is how to bring this to serve the order to the hacker, which we like don't know who it is really, but we know the wallet address. So what we did is we created a service NFT and delivered the Soberana as an NFT to the wallet. And the NFT has a URL in the name, which leads to the publicly made documents with the court order and all the evidence and everything. So it's the first time in history legally that this court order had been served to the potential criminal or alleged criminal as an NFT. So it's the first time a service NFT had been used. And so now, like a lot of newspapers reach out to lawyers and to us, and I did a lot of interviews the last 24 hours.
Holy shit.
About the story.
This is nuts.
and what is fascinating is that it was immediately noticed by our community, by others, and like hundreds of clicks on the URL already. So when you click on it, then you find the court order by the New York Supreme Court. You find all the details. There's also our like police report, which we sent in January there. And that's the point also where we like by law, under US law, it needed to be published in public. And that's why we also changed our strategy from like hiding and watching the hacker to let's go all public. Like we have to publish everything now, increase the pressure. And we've frozen 60% of the funds now who had been stolen. And also showcasing again our division of LCX, of like combining laws, regulation to the blockchain. And I would say on the blockchain, everything is much more transparent. If the funds would be stolen in our bank, the money would be gone. It would be going through different banks. Mm-hmm. There's no tracing system. It would take ages to have like any like tracing functionalities over several countries or banks. But on the blockchain, it's actually more compliant, more better ways to create something, which is legit, which is there for the future of the digital of Web3 and the decentralized.
Well, there's pros and cons. It's easier to see where the money is and the 16-digit address associated with that, the wallet. But it's harder to trace that back to an individual human. Where a bank, it's the other way around. It's harder to see where the money is, but once you find where the money is, it's way easier to find the human being associated with it. Wow, what a story!
But it's changing.
Yeah,
this is changing also. Like now, people are filing for the .eth domains, which is connected to a wallet. So your wallet becomes your identifier, your unique, your online identity. Mm-hmm. And this is happening already now. Like there's some blockchain analytics tools. Like we know all the wallets of our clients who like withdraw. There are ways to identify even if they are not connected to an .eth ENS domain. But in any way, what I see as a kind of development there is really the wallet becomes your unique identifier.
Is the guy who did this? Was the hack like a technical? Impressive hack, or was this like he tricked somebody to do some, hey, reset your password, and it was like a basic dumb kind of the latter?
Exactly. So basically, as a crypto exchange, you are a target all the time.
Right.
We have phishing attacks, people trying to sneak into our Slack accounts. My online identity is copied every second day. Just yesterday again, Instagram, people messaging friends of mine, and they think it's me. It's happening all the time, and in this particular case, it's also a backtrace to our analysis to one of such incidents, where one of our developers got tricked, and so that's why it was one particular security incident, which is not related to our platform, but just like stupid mistake or something. And this could happen to like any financial institution and anybody, and they're targeted all the time. And so that's why like we are proud, because it's not our servers or our security firewalls.
It's not a technical issue. It was just a human mistake.
And then what's been happening now is, I would also say, like you said, it's stupid. It was not clever how to like laundry the money.
Yeah,
like
go to Coinbase. I think if you ask me,
Coinbase, like
Monty, if you were to say, hey, Mike, like what's the most regulated crypto company? Coinbase is the top of mind. I'm thinking Coinbase, Gemini. These guys have they married the legal system. So to send money there is like, come on, bro. But you guys paid that money. So you paid months ago. You paid 9 million, 8 million, 9 million, whatever the guy stole, or girl, who knows. And that must have been a difficult pill to swallow.
Absolutely. So January, the start of the year was terrible with that news. But in every bad situation, there's some good things as well. So when the hack happened, I think early January, then like 2 weeks later, the market crashed 30-40%, everything down. So we had to buy back some assets to provide it on the platform, but we got like 40% discount on it. Then we also had good partners. We are partnering with Sandbox since a long time, and Animoca brands. So Sandbox basically gave us a good deal on Sandbox tokens. So we bought Sandbox token directly from them, and so on. So a lot of like help from the community everywhere. Yeah. Also like tracing the funds,
and also so, just the fact
it's
that
a small family.
You've now issued the first public in the world, the first public court order via NFT, which is, I mean, if you think about the upside to this experience, you've really stress tested the system. Like, this is how countries and legal systems coordinate with crypto companies to prosecute people and bring justice to people who are criminals. I'm curious to ask you. So an NFT was sent. You knew the USDC address associated with this wallet, and the NFT was sent via some. How did the person get this NFT? It was sent via what?
Yeah. So, I mean, I can send you anything. I'm receiving, or like we're receiving, spam tokens all the time. There's no way on the blockchain that you block your wallet to avoid any tokens sent to you.
Right.
So it's basically it's the address. It's open. Everybody can send you stuff. So in this case, it's so USDC based on Ethereum.
Oh, I see.
Blockchain. There are two transactions happening. So the first one was the so-called like by court order from Supreme Court of New York to freeze the funds. Technically, it's not frozen. It's what they call blacklisted. So it's a blacklisted transaction in the smart contract of USDC to this particular wallet. So that this wallet is blacklisted out of the system, which means the hacker can't transact. The funds are stuck there, the USDC. While like everything else, like ETH, all other tokens can be transferred, they can't be blocked. But USDC has this blacklisting function. So there's a transaction hash now which says blacklist this wallet. That was number one. Number two is then 24 hours later, we served this NFT with the court order and all the attachment with the link to the wallet. So basically what happened is there's a transaction with like from the wallet of our lawyers. There's a smart contract behind with the NFT, and the NFT had been sent over to this wallet, and it's now in the section of ERC 721 tokens. The name of the token is the URL to the legal document.
Wow.
And so how does the hacker notice? Like,
right.
I would say like, I never look at what's being sent there. But the moment the person wants to, or like the group wants to transact and say like, I want to exchange it, I want to send the USDC somewhere else, it's not working. And then you start looking
Right.
at like why it's not working, and they will find this NFT for sure. Like they will look into the wallets, like what's wrong, what had been happening, and so on. So they will find it. And so it is like the judge in New York said it's, let's say, like it had been served and sent officially. So it's like giving you the letter with the court order personally, or sending it with UPS. It has been served officially, legally, in this innovative way. So there's no way that the person or the group and there is not recognizing it. It's just a matter of time. I'm not sure about these legal timeframes and everything, but you know, you will notice it at some point.
Dude, this is super interesting. I've had a couple of these conversations where other companies have been hacked and how they've dealt with it. Both of them, I've had two others, I think. They both seem to say, let's make it right. Let's repay this wallet. Let's fix it. And then let's prosecute and figure out how this happened and get this money back. And it's fascinating. I mean, I'm on the edge of my seat when I hear your story. It's like, obviously, I can't imagine how you've gotten anything done in the last 5 months when, you know, you've raised 9 million and the wallet that was stolen was 8 million. And it's like, oh God, that's got to be difficult to go through.
Yeah, well, on the way since we launched our token, LTX token was listed on Coinbase. It's the like first exchange-based token listed on Coinbase. It still is. So during that hype, the token reached a new all-time high. We had more than 300 million market cap. So I think with that market also, that being like funding coming in, for example, we provide a lot of liquidity on DAXs. This gives like cash flow in many ways. So so the token itself also gave us kind of additional opportunities while we're like not actively selling or anything like that. But the token itself, the value of it, we can create crazy things with it. And that's so exciting as an entrepreneur. Like coming back to the beginning of our podcast, where I said like it's the most interesting time to start a company, and like I would never do equity funding again. Always go in a token because you have this community of ambassadors and fans who cheer you up, who are there when something bad happens. I mean, most people supported us during this hack. It was incredible.
So you were open. You've talked about this for a while now. This has been out and open since. When did you go public with this?
Since 24 hours.
24 hours ago.
So roughly, exactly. Like as we record this now, 24 hours ago, there's an update on ltx.com/insights. About the hack. It includes the things I explained. And then there's another, like the first announcement, which we did a couple of hours after the hack in January, with like continuous updates. We had been super transparent on everything. In the meantime, like since January, a lot of things happened, which we couldn't talk about, which had been like with the police and public prosecutors and so on, and lawyers. But now, as it had been published anyway, we changed the strategy and said, we now make it public. We talk about it. We increase the pressure on these bad guys.
Did you, in the when he moved it to the Coinbase Europe account, why wouldn't Coinbase have his identity there, or they do? Okay. So you effectively know
there is. Right. So if you are active on Coinbase, you have to get a verified account.
So you know who this.
So these details are not disclosed in the blog post.
But you know who it is.
There's investigation ongoing. That's probably something I can talk next. In a couple of months.
But at least you have the identity of who this human being is, and therefore you can, once you have an identity of a human being,
like we have some identity. Yeah. So,
wow, that's awesome.
But like, you could imagine it's many speculation around it. So it's, the person or the group is not yet fully identified, even if we have like some documents there. It's not that easy.
Well, I appreciate you going a little extra to explain the story, given how hot it is off the press. It's super interesting. So I'll make sure to plug this early on. keep me updated. Would love to hear if like exciting news breaks on this. We should do another just impromptu show and put it out there, because this is a wild journey, and you're blazing new territory on how companies should think about enforcing hackers. Bringing cases to people. So I think what you're doing is extremely relevant for other crypto companies, because you're not going to be the last team to get hacked, right? This is going to be forever a Achilles heel and a constant battle of cat and mouse. Yeah. So seriously, let me know.
So, absolutely. I mean, we've been engaging with policymakers from the beginning. We're part of the World Economic Forum, where I spoke with, we did several workshops on central banks, digital currencies with central banks. This is the major topic. Like, what if a central bank digital currency has a problem, a hack? I mean, the public will lose faith in the official currency of the country. This will be this disaster and all these things. So we addressed it right from start, and we want to be a role model. And I'm excited, Mike, to talk with you again in a year or two or longer. We are here for the long term, and the journey of LCX has just.
Well, I hope it doesn't take that long for you to find this guy and bring him to justice. I hope it's a lot shorter than that. But either way, feel good about it. It's like a hard workout. It just makes you stronger for going through it. Or
it's a marathon and not a sprint.
Yeah. Well, keep me updated, man. That's an exciting story, and overall, obviously, exciting project and vision. You're definitely living the entrepreneurial life. So thanks for sharing, Monty, and we'll talk to you soon.
Thanks.